All right, good evening, guys. Ken of Tortoise Capital Nightly Strategy Podcast for April 18th, 2022. So I came across this um, advertisement for a day trading course, and this is what they would propose that you learn in the course. And they remind you that that course in beginning day trading, depending on how serious you are, takes at least a full day, to complete. So if this is the Jeopardy answer, I think the question is, what is krill? I'll leave that to you to sort that out. All right, are you guys seeing the market health check there? Just want to make sure.
Yep.
Okay. Let's take a look at the health check. So today there was a slight gap down, made a new 10-day low, and then closed to recover yesterday's close, or Thursday's close. So we pretty much remain in that same kind of yellow zone. Price is right in the middle of that at 8.8% off of the swing high. The RL10 price continuation is strongly down. The 3-period whole moving average is even more sharply down, the shortest term momentum we track. The Bollinger Band mean is still slightly up, but the PSAR and the RL30 are both down. Long-term RL270 price is down. We're halfway between Z0 and Z1, and all it takes is a break of this 10-period low at 436 to trigger the move to about 429, which is Z1, which then leads to the collapsing dragon and Z2 and the 30-day low. So there's still plenty of reasons to be worried about this bear normal market. We haven't even seen the return of significant volatility yet. You can tell because of the relatively narrowing of the Bollinger Band, and we haven't seen an explosion in risks, in risk Z. So this is just ordinary price decay. We haven't even seen panic yet. My spider sense is that if this breaks, and certainly if the river breaks, then panic kicks in right around here. And then here's the test of long-term support. And that's about another 24, 6. That's about another 6% from here down to here, which would be a real significant pain. All right, next up, we'll take a look at the sectors and the 6 primary indexes. So the S&P was fractionally up today at 0.04. The Qs were the strongest at 0.08. So when that's the strongest, that should tell you just how gloomy it is. The diamonds were slightly underperforming at 0.06, then emerging markets 0.34, treasuries 0.5, and then the Russell was the worst at 0.67. Now, that's not really a wide range of variation in those indexes, but the fact that there was like no love in any of it is just part of this steady drumbeat of declining prices. Everybody waiting for the next guy to take over. Let's look at the underperforming segments. So we had the Simon Property Group was basically flat. Lithium and Wheaton Precious Metals, 0.36, 0.4. Blockchain and lumber, 0.6. The other lumber, 0.77, minus 0.77, I should say. Consumer staples, balked internet crypto holdings, I should say. Global future of finance, clean energy, 1.36. ARC innovation, minus 2.7, deeply into the winter on the daily. Moonshots, minus 3%. ARC genomics, 3.5%. Marijuana, 4%. XBI is S&P Biotech, off 4.76. Individual targets that underperformed. Rivian was off almost 6%. Robinhood, 3.4%. A cluster of the other financial disruptors, Coinbase, Squarespace, and PayPal, all off about 1.5%. So not much love there at all. And even bellwethers like Cliff and Apple were slightly in the red today. So a wide range of underperformers bringing disappointment to the world. There were some outperformers though, beginning with materials, 0.09. The FANGs up a quarter. Consumer discretionary, 0.3. Tech, finance, Brazil, oil, blended commodities, agriculture up 1.2. The VIX 1.3. Mexico and energy up 1.4. Blended large cap crypto 1.6. Oil exploration 1.9. Bitcoin futures were the strongest today at 2%. Individual targets that outperformed. The world is rallying to Elon, 2%. Tesla. Alcoa bucked the trend in the metals, up 1.9. Devon Energy 1.6. US Steel 0.3. Microsoft and Ethereum up a quarter. So a pretty reasonable range of things to choose from that included not just tech, but energy, finance, and then our internationals here, Brazil and Mexico, continuing to show some regional strength because they're not Japan or China or the US or Europe. They just seem to be flying under the radar, and I would continue to focus on those short term. We'll take a look at the markets next, or the reports. So we are still in bearish normal conditions. We had just the slight recovery on the 2-day, but the 10-day is still suffering massively. The risk index is still above the 0 line, so it is marginally in the risk on category, which means that there's still reasons to trade this on the long side if you get some intraday support. We'll see that, as Luis points out, a lot of 551Ws today. That's kind of encouraging that there's some broad strength. That's what the start of a local minimum looks like, as if that's a rebound point. Market's still been suffering in the oversold conditions here for a while. Latin America is the only one of the big indexes that's above its 200-day moving average, and it's also oversold. So that's why it is a channeling system in our mechanical swing system right there. The strongest of the broad indexes by far. 10-day min pains. These are the ones that are the closest to their 10-day high. Chevron, Exxon Mobil, Goldman, Nucor, and Travelers. So strong presence of energy and metals there. The techs are still lagging. Tesla, Microsoft, Cisco, NVIDIA, PayPal, Netflix, Google. So lots of pain and suffering to go around. Handful of dojis today. Plenty of auto framers that are better than 2 to 1. The one that just really jumps out and grabs you is Microsoft at 7.7 to 1. And the fact that it was up a quarter. And it is still at 7.7. That means today's range on it was so tiny that just using a range risk should give you that large multiple. So that's worth framing. Luis says, hey, take a look at all the 551Ws. Looks correct. So Apple is channeling and 3.8 to 1 into 551W. And that was up 0.56. So Apple and Microsoft both fall into that category. Cisco is at 5.3 to 1. It was basically flat for the day. So that whole tech cluster of old school tech are all poised to do some good things tomorrow. And even Intel at 2.3, and it was one of the big winners today at 2.39. So out of those four techs, you got to believe something's going to work. If a couple of them start working, that's going to drag XLK to the top of the stack tomorrow. So tomorrow's actually looking pretty favorable in my view for tech follow through. Just about every ETF is on that 551W pattern. That's one of my favorites. It's like a relaxed triple screen from Alexander Elder. As I said, oh, there it is, a relaxed form of the triple screen. We like that. Something that's strong, has a temporary pullback, and is beginning to show 1 day of recovery, and then we're buying the second day of recovery. So that's why that's interesting. And good observation by Luis. He understands that pattern pretty well. And then there's a ton of auto framers that make this a buyer's market. I find Japan very hard to trade. It's interesting, but I find it very hard to trade. Latin America and the Russell small caps to me are very attractive. First, the Latin America, because it's the strongest of the big 10 sectors, and it's 4.5 to 1, and it was a channeling signal today. So it just doesn't get any better than that, because you get the possibility of a nice 1 day pop, and you get a nice follow through to the 10-day high at 4.5 to 1. So that's got to be on your short list. And then I would just say the entire technology sector itself, which is down almost 9% for the 10 days. If you look at the 10-day range, it's down 8.9%, but today was up 1%. And it's offering us 5.9 to 1 on the reward to risk ratio. So neglect that one at your peril. And that's actually in better posture than the NASDAQ. So the old school tech actually looks better than young tech. Oil exploration is just, it says, look at me. What do you want? And metals and mining, I think selectively is interesting. I think I would be more likely to play the individual metal companies than the broad sector, just because there was a large divergence between, Apple and Nucor versus Cliff and Alcoa. So I think I'd be looking more at the companies than the broad sector, but you know how to do that. Auto framer, this is a buyer's market, so we'll be looking at the framing data in the usual way. And these are all the ones that are better than 2 to 1 on a test of the 10-day high. The framing data gives you that automatic trade frame for mechanical entries and mechanical initial risks. In the regression line fractal framework, this top shelf in the green, these are all the symbols that are the most number of ATRs below their long-term fair value. So this is like a short-term harsh sell-off. And Home Depot, for example, gives you 6.8 ATRs from its current price at the RL10 all the way up to the RL270, whereas Microsoft is 6.7, and then there's Cisco also at an extremely large multiple, which looks manageable on a swing trade. So Cisco and Microsoft in the old school tech looks really attractive to me. Similarly, this the bottom shelf in red, these are the ones that are the most numbers of ATRs above their RL270. So this, the concern there is that these might be overheated and due for a tactical pause, or it's a sign of red hot momentum and reward momentum as it keeps going. And that's what I'm prepared to do with Latin America and Brazil leaving price in the dust, and metals and mining also looking pretty good. So that's how you read that chart. In the daily squeeze, there's only a handful that were better than 2-to-1 for a 1-day breakout. And because we're in bear normal, I'm still making a strong emphasis on the yellow zone trading. Our standard reliables here, the S&P is in really good shape at 2.2-to-1 with about $1 for its minimum manageable risk box. Remember, we take the range minimum and we take a look at a quarter of that to see what we can see. That may be the manageable risk. That's where we start. And then Brazil at about 10 cents, the Dow at about 45 or 50 cents, Tesla at about $6. So all of those look tradable. They're all frog champions, but the S&P is especially tasty. The fact that it's one of the daily squeezes says that there is a lot of potential energy being built up inside that symbol, and that when it pops, you get these large 1-day moves, these large multiples. So that would be our rationale for favoring those things that are in the green. I like the fact that tech and XLB are both in there as well. And I like that Microsoft is in there, which we saw was 7.7-to-1. So if we don't frame Microsoft tonight, then we just don't deserve these setups. But fortunately, the market doesn't remember when we don't do the work. It just keeps giving us good setups. So we're grateful for that. In the MACD histogram, still a lot of symbols in the fall. On both sides, the ETFs and the large caps. A few more sneaking into the summer here, metals and mining, energy and staples, and then the key members of those ETFs in the Dow. I like the fact that Cisco, Intel, Microsoft, IBM are all in a period of great suffering. And to me, that kind of extreme harsh winter is perfect kind of setup conditions to start stalking those SSCs when they recover. They're not going to go to zero, said General Motors. In the multiples of the NDX, the leaders are at the bottom there. Caterpillar, Goldman, Devon Energy, Chevron, ExxonMobil. So you can see the dominance of energy. And you see that over in here, metals and mining, and then the next three are all energy related. Oil exploration, and S&P energy itself. So that's going to tell you, until told otherwise, that should be your primary focus for getting the directionality of the day. On days where it starts following through, you want to pile on. On days when it starts lagging, and that's where you're being clear on where your stops are on those swings. That's about everything I want to cover from the daily. Let's take a quick look at some trades. I want to look at trade frames first, and then we'll do some bar by bar work. So here is ZIM. This was just from Danny, the TC 2000 alert hit right here. It said, watch for a kata 2 and a Z3 pinch breakout. The entry occurs here. The standard risk box is at the PSAR dot, so that's about 30 cents ish. It makes a breakout above the previous Z pinch up in here, and the RL10 peak. So on the basis of that momentum, since there's no resistance until it gets all the way back up to the previous close or the high of the previous day, I just go ahead and put the second position in, and this thing ended up getting up around 56 before the day was done. But in this case, on this bar here, which is a 5-minute bar, I'm already at no lose plus dinner for 2 on both positions. You know, the first position is well into the money. At this point at 55.66, it's up $1.40 on a 30-cent risk. You know, or no, it's up 30 cents on a 30-cent risk. So that's more than 1 R. And then this one is at no lose. So that thing turned out to be a nice trade today. Another one from Danny. This was in MP Materials Corporation. It's in the basic materials sector, industrial metals and minerals. And he likes the 5-minute chart. This was given signals all over the place Friday, and then today, collapsing dragons, until it finally could not fail any further and gave us an alert for a potential SSC. And then the SSC formally hit the next bar over. So you get an entry around 46.80. You're using about a 30-cent risk box here in this little yellow piece. And then within about 30 minutes, you're up far enough to be able to move your stop to no lose plus dinner for 2. And so I don't care where this thing goes the rest of the day. I'm not losing any money on it. And so, you know, much praise to the TC 2000 alert system. Let's go to, let's see where I did the daily. So let's hit the report or the trades from the boys today. There were only a few uploaded. So here's Griff with the kata challenge. So this one is the SSC only. This one loses 1.4. Here's the low. Here's the, higher low. You could, in one sense, you could call that a kata 2. But I look at this really, I would agree with him that the fact this got into the winter and then reversed, that's reasonable to call that an SSC. This was a quick scratch. We're going to see later that the CD really pays off. So every one of these that is a failed SSC turns into a CD that more than pays for the initial move. All 3 of those, in fact. And this one, actually all 4 of those that are losing trades get paid for by the CD, and this CD wins them all. So a nice scratch or a fractional win. This is a good quick scratch again. So the SSC was not working in Brazil. However, the CDs, which is the stop and reverse, pays for that. Now, one of the things that you want to notice is that when you get 2 SSCs in a row that fail, you might want to just stay with the CD instead of taking every possible SSC. You know, your call. But the CD was 1.36, and then the kata 2 captures an additional 1.34, and these are the ones on the downside where you get that second position in. So he's done some nice work. So the net for the day, when you put all those things together, was over 1.3. So nice work. Here's some trade frames now from Glenn Osborne. And he's got the weekly, daily, and the 30-minute tactical here. And we're looking at critical states in every case. So here's one where it had come up to test the previous weekly high and now has rolled over and pulled back into this nice tight compression. So from this critical state between the green line and the red line on a weekly, there's a nice move up to 165. That would not be controversial. That's a $7 move on what will start off as about a $2 risk. So that's about 3-1. And then to the downside, you can see he's going to get a second position in here at about 152. You could think about a third position here when it breaks below the dragon, and certainly even a third position if it breaks below 140. So the move to here is minus 18 on a $2 risk. And then that would give you 9-1 to the downside. So in this case, waste management is really vulnerable to this downside move, but the upside move is certainly there. So you have a nice asymmetrical critical state. This almost feels like a continuation play. You had leg 1, this would be leg 2, and it pulls back, finds support, and then it's going to come up and test 155. Now, notice he's got a second position programmed to be here because what he wants to do is have 2 positions in hand. So if it does break through, there's no resistance overhead, and then this thing should really go. And then he's got 2 positions in the money. On the other hand, he gets a nice 1 position short and then takes the second one when it's clear that this resistance or this support fails. And now he's going to be playing to get back into around 140. So this is a nice one in either direction. And you can note the relative size of the frog boxes or the MMRB, depending on which, how active you want to be intraday. So good frame. This is Disney, and they are just getting slaughtered in the press and in price. There's just, they're so woke, they have no place to hide. And their form of fantasy entertainment is kind of getting old. Nice rebound available to 150. So that's about plus 22 on about a $1.50 risk. So that's about 15-1 on the weekly swing just to get back to 150. That's a considerable move. And then the breakdown, you can see there's actually no support over here whatsoever because it's well below the 2 previous downward excursions. So this thing is just, it's not done failing yet. So as soon as it breaks below 127, you should have no hesitation in getting short and piling on this thing. The upside move is easy to see, target 130. There's no reason to believe that's a long-term hold, though. You are a hyena picking over the bones. Hyenas got to eat too. Mexico, EWW. You can see this strong leg up, and then the challenging weekly chop, which had some sharp sell-off, but now has clearly run up to 55 and now pulled back, and now is postured for a retest to the upside or a return to the previous cluster around 49. So that gives you a nice breakout range inside here to be able to play in either direction. So again, perfectly postured and ready to go. Now, if this breaks out above here, I would probably put my stop right here, because if this moves up and gets me long, I'm not going to wait longer than here to get out. I might use this whole position as the risk box, and I wouldn't get short until here, but I would cut that one. If it gets me long and then fails, I'm not sticking around longer than that because it's come through the dragon and the VWAP. So this is one that I would be quick to get out of. If this is going to work, it should work fast. If it doesn't work fast, it's not working and get out. It's like a lottery ticket. And you open it up, and you scratch it quickly, if it's a win, it's instantly a win. But if it's not a win, you scratch it and start looking. No amount of you looking at it and wishing and hoping is going to make that lottery ticket turn into a winning position. So when you open the envelope and scratch it off, if it's not a win, it's a loss. Get out of it and go find a new one. These things should be working quickly when they come out of these critical states. So let's watch Brazil or Mexico as a frog champion. That's a classic intraday trader poised to win in either direction. All right, let's take a look at one bar by bar here, or WMB3, I should say. Okay, so the first thing that I'm going to do is from the morning, I'm just going to notice the size of a standard normal noise box. This was in a sideways chop, and that looks like a reasonable box that I can use for reference later on. So now I'm going to come over here and take a look at the first thing I'm looking at is Williams percent R, then the MACD histogram. And I'm waiting for the afternoon trade. So see this one oversold, and now I start looking for upticks. Do I see any upticks? No. Yes. So here's the first uptick. So when that one closes, now I can go to the bar where this closed, and then a breakout from above that bar is an indicator that I can enter. Okay. So my reference bar is this one. So the high of that bar is right here. So I'm able to actually take that entry on the breakout. You can see where that broke out. And I'm taking that standard risk box as my MMRB, which is also the swing low over in here, right? So I'm going to just draw my big fat box right there. And now my job is somewhere once this thing gets, probably if it were to get up to this price level, then I should have a new lose plus dinner for two somewhere around there. All right, so I'm gonna. So my yellow box is the risk. I'm looking for an opportunity to get my risk out of this up into that level as soon as I can. This feels like a time right about here that I would be willing to make that move. So about 15 minutes into the trade, it's given me this series of rising lows. It feels like the train has left the station. So by this time, I'm ready to be at about a 2-bar low. And now I've locked in that gain, and I'm not going to lose any money on that trade. This one feels pretty good because I was only ever underwater for a couple minutes, a fraction of time. So this feels pretty good. And I would be happy to take, I would be happy to take that exit. You could decide where you might want to take a reentry. I could argue that you might be ready to take a reentry here or above this, above that resistance box. I'd be happy to take the higher yellow dot or the second yellow dot. So neither one of those would offend me. So I would be happy to take this one. And then use my standard risk box once again. And have some kind of trade like that. By that price where I got a doji, you can bet I would be here. And I want to lock in my little gain right now. So that's about 8 minutes of open risk. And I'm not going to lose any money on that trade. So let's see what happens. What can we do? Let me just go ahead and lock that in. Should have done that 4 or 5 bars ago. Yeah. Where I actually got the exit was here. Should have been better. But we get that trade. In my trade this morning, I was not as strict. I didn't take this and that one. I actually stuck that out. I didn't get the reentry. I just traded the first one. But I would be happy with this trade and then that second leg, either way, in retrospect. I take the reentry on the breakout out of that congestion box. By the way, that congestion box is the same size as the standard risk box. I'm using that all day. Oops, so we get this, so we get that reentry right there. When it makes a high, I just hang that box from the top and I get out of it there. So I'll take that trade also. Tell me if you want those 3 trades. So now I get a recovery from that low. It moves a standard risk box off the bottom. So I just go ahead and re-enter. Put my little stop right there in the usual way. Oh, you can tell this is already going to be a good one. So this one, we just take I take a risk box off the top. I'm just trading it. So if you just hang from the highest high while you're in the trade, your standard work, and I just take that exit. So I get that trade. Oops. Off the bottom, so it's a re-entry. You get that one. So there's 4 or 5, depending on how you handle the first box, 4 or 5 trades on Ethereum with a standard risk box traded with the WMB3 and a very minimal indicator set. And it's based off of support and resistance and the standard work box. So, all right, that's everything we got for today. We'll get this published and posted and hung on Patreon for you. And let's be ready for tomorrow. I want to look at Microsoft one more time.
Is that Ethereum on today's charts?
It's a 1 minute chart.
And you're not looking at the RSI on that? You're just taking it from.
Nope. Just the WMB3, Williams percent R for oversold, then move up to the MACD uptick, and then buy the breakout of the next candle, WMB3. It's in the foundations course.
Yep. Okay.
Very simple.
That is amazing.
Oh, it's better than that.
Yeah.
It's routine. I'll tell you what's better than amazing. It's routine. I wanted to take a look at Microsoft real quick here for a minute, if I could. I do want to look at that on daily. So. Why is this giving me such a hard time? Yeah, that's Microsoft on that the auto framer and the daily here. That's what, boy, is that ever nice. This one is a little more colorful approach. So this is on the daily, right? So this is a daily chart, and we're noticing it's finding support right where it's supposed to. And this is the daily range. So if this holds, we're not allowed to be surprised because it held right there. And the last time it was there and it held, it did this and moved from 278 to 316, which is 38 bucks on 270, which is about 13%. And during that time, it went from the winter to the spring to the summer and then peaked. And now it's in the fall and has now come back to test the previous hold. So with a really small risk, you can see that this was like 7.7 to 1. So if you just took the daily risk as your measurement of reward and manageable risk, that's 7 to the upside. And then if this breaks down, I don't know how far it's going to go, but it's going to go more than one daily risk box. It's going to go down to, 250. So this turns out to be a range compression. You can see how the big sell-off was here, and now the loss is starting to slow down, and it pulled into a tight little compression box. This is a perfect critical state for us. It's had one long slide, held support for a strong 13% gain, gave it all back, and is now testing the base of this golden mountain, if you will. And it's in a small range critical state, 7 to 1 to the upside, big gain to the downside if it fails. So Microsoft is in a critical state for us. So I'm glad we took a chance to look at it. Okay. All right. That's everything you got for us. We'll get this published and posted and ready for tomorrow. Take good care.